Hi, this is Ben Parojcic with ReMax Beyond 2000, and welcome to your Real Estate Market Minute. Well, today I wanted to answer the question, can the coronavirus tank the U.S. real estate market? And you might say, well, Ben, isn't that a little bit panicky to be asking that question at this point? It's really not, because the Chinese real estate market has already tanked, and it's down to its 18-month low, according to the New York Times. In addition, developers there are giving discounts of up to 25% to try to move real estate product. That too, according to the New York Times. So it's a very serious downturn in China. Well, China has had 70,000 confirmed cases of coronavirus and 1,800 deaths, while the U.S. has had 67 cases of coronavirus and, as of today, 1 confirmed death, sadly. So it's a big difference. So once again, should we even be asking the question? And the answer is yes, we should, because we're connected together by international business, and the Chinese have had to take very extraordinary steps to try to contain this disease. For example, Wuhan City, where coronavirus originated, is a city of 11 million people, and it is basically on lockdown. It means that there's no buying, no shopping, no going to work, no producing out of that huge city. And that's not just in Wuhan, but it's happening in other smaller cities and regions around China where there's really big outbreaks of coronavirus. What that's done, it's disrupted the supply chain for the United States, and it's also dampened demand. The Chinese are not buying as much stuff from us. So both of these things are lowering corporate profits, or going to lower corporate profits. In fact, just this past week, Goldman Sachs came out and said that profit growth for 2020 going forward is going to be 0% growth. And as soon as they said that, the stock market tanked again. So for the whole week, last week, we were down 1,100 points on the stock market. That's because we're seeing corporate profits not grow at all. So what's going to happen if corporate profits stay low for long enough? Can you guess? Right, layoffs. And layoffs are the transmission mechanism from Wall Street to Main Street. If people get laid off, they're not going to be buying houses. And it doesn't have to be a lot. Unemployment only has to increase from 0.3 to 0.4% to change buyer behavior. It doesn't seem like a lot, and it's not, but it only takes a little bit to disrupt consumer confidence. And that's what we could see that happen if this continues. Now, we've got months for this to kind of play itself out. I would guess maybe 4 to 7 months. And that's a lot of time for doctors, hospitals, health organizations, and governments to figure out a vaccine, have these quarantines work, and stop the spread of the disease. So it doesn't have to happen that the market tanks. We could figure out a way to stop the spread of the disease, and in a couple quarters, 6 months from now, profits go back up and we're fine. That's a very real scenario. But you also have to put on the table the fact that this could be a prolonged downtrend in profits, which could affect unemployment, could increase unemployment, and that would affect the U.S. real estate market. So that's your real estate market in a minute. Hope you found it informative. If you did, remember to like, share, and subscribe. This is Ben with ReMax. I'll talk to you soon.